Hello Market Club members everywhere. Adam Hewson here coming to you from the digital studios of Market Club. Well, it's Friday. It's the end of the week. It's the 2nd of September. We are looking at a long Labor Day weekend. And I thought I'd look at gold this morning, today I should say. And what we're looking at is a weekly chart of gold. And I've drawn a trend line, which you can clearly see. And it still shows that the longer term trend right here is still positive. We sort of had a move up, came back down, we had a move up, came back down, but this line is still pretty much intact. The one thing to look at though is our trade triangles. If you look at our trade triangles, we have a monthly, the longer term trend, which I still think this is, positive. The weekly is negative, and also the daily, if we put the daily just turned positive today. So you only have the weekly indicating more of a sideways range of plus 55, indicating a trading range. And if you look at the month, or the week I should say, if you look at the week for gold, it's been quite a week. We had a low of 1305.70 on December contract, and we're currently trading right around the 1323 level. So it's come up quite a ways from where it has traded earlier in the week. So let's see if this line holds, but generally speaking, I would be looking for this market to still consolidate maybe another week or so and then resume its upward trend, but we'll see what happens on that. Big loser for the week has been crude oil. You can see we're down quite a bit, and it really hasn't turned around yet. We're down probably about 7% for the week, but generally speaking, it still is in a positive mode in terms of our weekly trade triangles. Only the daily is negative. We use the weekly for trend and the daily for timing. So it's a 65, still in a trading range mode. We are below the 50 line on the RSI, indicating probably you should be out of this market, which is indicated by our daily trade triangle. You should be out of this market totally and on the sidelines and watching the activity. But generally speaking, this was the biggest loser for the week. This is a weekly chart of the Dow. As you can see, the Dow is actually up on the week after a poor performance in the stats, and you can see we're currently about 0.5% higher for the week, but nonetheless it's still a positive week for the Dow. Generally speaking, our trade triangles, we are mixed. We have a weekly that's down and the monthly that's up. The longer term trend is still positive for the Dow, but I'd like to see the weekly turn back up, and it will do that when we move over the 18,600 level. So let's see how that plays out. Generally speaking, the RSI is still very positive. There's the 50 line. We're above that. We have been for quite some time since we moved over here. So it looks very positive, still longer term for equities. This is the NASDAQ, still a weekly chart. You can see right here, and you can see we're actually up for the week, 0.62%. Not a big change, but still nonetheless, it is positive. The only other thing we have here is a weekly is down, indicating more of a trading range. But I would be more inclined to be a buyer here because I think the market's making a turn, and our longer term monthly trade triangle is positive. Plus, we're very positive on the RSI, so let's watch that. This is the last of the indexes, the S&P 500. You see it's up for the week, 0.55%, which is good. Nonetheless, our weekly is still negative, indicating a trading range in this market at the moment. Longer term, still positive. Intermediate term, more of a trading range. Look for more base building and eventually moving higher. But the good news is the RSI is above 50, and we're looking for this market to go higher. We're going to be looking at a smart scan today and looking at stocks that are making 52-week highs. Now we want to click on the smart scan button, and this takes us to our smart scan. You see here that 1 week highs, 1 week lows, 52-week highs. This is what we're looking for. So we want to hit 52-week highs, and there's 386 now. That's a lot to go through. I think you'll agree with me there. So what we want to do is to filter that, and we want to change the daily volume to 2 million. So that'll get rid of a lot of stocks, that quietly traded stocks and so forth. We also want to look at just US exchanges, and then we're going to scan. Now here we are. These are the stocks that are making 52-week highs that match our criteria of 2 million shares on average a day. So there's WPX Energy, looks very, very good. You can go down the list here. You see a lot of stocks you may have heard of, but again, this is just a list. You can pick up what you want. Alibaba, there's an interesting one. Electronic Arts, Tyson Foods, Yahoo. These are well-known stocks that you can pick. The idea is you buy it very close to the closing bell. If it's at or near its highs, then you sell it on a Tuesday and take your profits. If the market opens sharply lower on Monday, which we're not going to be open on Monday, you would get out. But you would do this on this weekend. It seems like an excellent way to do it. So, hey, I'm Adam Hewison. Thank you so much for watching, and really have a safe and enjoyable Labor Day weekend. We'll be back after Labor Day. And thank you for your business and for watching the video.